Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. As we kick off the new week, let's look at 4 major economic events to watch in the coming days. First up, on Wednesday, the US will release October's inflation data. Economists expect the Consumer Price Index, CPI, to rise by 2.4% year-over-year, matching September's rate, which was the smallest annual increase in inflation in over 3 years. This points to a continued easing of inflationary pressures. As Wall Street watches Wednesday's data, 2 key topics are likely to drive discussions. The first focus is the gap between reported inflation numbers and what Americans actually feel when it comes to rising costs. While inflation numbers might show moderation, many are concerned about high living costs, especially as they impact voter sentiment in the aftermath of the recent election. The public discourse has shifted to the real-world price increases people face compared to 3 years ago, beyond the official inflation data. The second focus is the market's reaction to a Trump administration. Wall Street has seen a boost following Trump's win, but there are questions about his policies possibly fueling inflation. So, Wednesday's CPI data might test investors' long-term inflation expectations under a Trump administration, with potential impacts on stock prices reflecting these concerns. The second major event to watch is a series of speeches by top Federal Reserve officials throughout the week. Last week, the Fed announced a rate cut, and now its members will engage with Wall Street to build consensus on future policy directions. Speeches from Fed officials Waller, Barkin, Harker, and especially Chair Powell on Thursday will provide insights into the Fed's thinking on rates, inflation, and the economy. The third key event is related to Bitcoin. Hovering near $80,000, Bitcoin and other cryptocurrencies have surged following Trump's victory. Trump has pledged to make the US a global crypto hub, proposing to establish a strategic Bitcoin reserve and appoint more crypto-friendly regulators. With the momentum behind this policy shift, the possibility of the US becoming a crypto center is something to watch closely. The fourth event involves global oil prices. After China's disappointing stimulus measures were announced last Friday, energy traders saw oil prices take a hit, with concerns that these measures may do little to boost demand. China's economic slowdown has weighed on oil prices throughout the year. However, with the Fed's recent rate cut and Trump's potential tightening of sanctions on Iran and Venezuela, oil prices could see renewed upward pressure. A more stringent approach to these major oil exporters could reduce supply and support higher prices globally. In short, this week's events span inflation data, Federal Reserve engagement, Bitcoin's rise, and shifts in global oil markets, each one adding unique insights into the post-election economic outlook. Here's the second major news story to share. Reuters reported today that Republicans are on the verge of securing control of the U.S. House of Representatives, just after winning the Senate. This marks the first significant confirmation from a major international outlet that Republicans are set to control the House, affirming widespread expectations that the GOP would achieve a sweep in this election, winning the presidency, Senate, and House. According to the report, securing the House will be a critical factor for incoming President Trump to advance his agenda once he returns to the White House in January. Data from Edison Research shows that as of October 5, while votes were still being counted, Republicans had already secured 213 out of 435 seats in the House. On Saturday evening, Edison predicted that Representative Jeff Hurd would likely maintain his lead in the competitive Colorado race. To reach the 218-seat majority needed for control, Republicans need just 5 more seats, while Democrats would need to secure 13 of the remaining 17 seats to maintain control, an improbable feat given the current standings. Out of those 17 seats, Republicans are leading in 9, which makes it nearly impossible for Democrats to capture the 13 seats needed to win back the House. Based on current projections, Democrats may end up securing around 8 of these remaining seats. This Reuters report is the first from a major outlet to clearly assert that Republicans have effectively taken control of the House, adding a sense of certainty to the political landscape. For investors, understanding the effects of political shifts on economic stability is crucial, and this increased clarity can help them better gauge market movements and potential impacts on specific sectors. Here's the third major news story to share. Bloomberg recently reported that Germany's opposition leader Friedrich Merz, who's currently leading in the polls and is likely to be Germany's next chancellor, expressed willingness to work with incoming U.S. President Donald Trump. In a Bloomberg interview, Mars criticized Chancellor Olaf Scholz as a lame duck and called for immediate federal elections, confident that he would win the chancellorship if a vote were held today. Mars, the head of the Conservative Christian Democratic Union, CDU, once led by Angela Merkel, has a complicated history with her. Though from the same party, Mars's rise was cut short by Merkel's political ascent, and he was sidelined for years, a setback he has long worked to overcome. Mars eventually pushed Merkel out of CDU leadership, and now he aims to strengthen Germany's international standing by securing a productive agreement with Trump. In recent political developments, Scholz, of the Social Democratic Party, SPD, lost his parliamentary majority last Wednesday after dismissing Finance Minister Christian Lindner, a pro-business Free Democratic Party leader, amid disputes over government spending. Under Mars's CDU, conservative support has nearly doubled compared to Scholz's SPD, highlighting Mars's strong chance of winning if elections are held soon. During the interview, Mars remarked on Germany's need to better articulate and defend its national interests. He criticized Scholz's one-sided support for Democratic candidate Kamala Harris during the U.S. election, which left Scholz unprepared for Trump's victory. According to Mars, Trump will remember this, and the new U.S. administration will no longer heed Scholz's government. Mars cited Germany's recent purchase of F-35 fighter jets from the U.S., suggesting that these jets should be maintained in Germany with American support, which he sees as a mutually beneficial deal. Mars, 68, added that he's already spoken with people close to Trump and stressed the need to approach the new president with clarity and respect. Much like Trump, Mars had his share of conflicts with Merkel, leading him to leave politics for a period during which he chaired BlackRock's German supervisory board. This news indicates that under Mars's leadership, Germany-US relations could see a significant improvement, potentially benefiting both countries' strategic and economic interests. Here's the fourth major news story worth sharing. This one is also from Bloomberg, with a headline that Honda's new electric vehicle is quietly creeping up on Tesla. After reading this, I was surprised, as recent US media coverage has mostly reported declining interest in electric vehicles, EVs, and slowing sales. But this story highlights a rebound in US EV demand, with Honda's entry making an impressive splash. Honda's new electric SUV, the Prologue, has gained significant traction, driven largely by loyal Honda customers who are transitioning to EVs. The Prologue, a mid-sized SUV, has quickly outsold many EVs in the US. Within 3 months, ending September 30th, Honda sold 13,000 Prologues. Interestingly, 2/3 of current Honda SUV owners trade in for another Honda, showing remarkable brand loyalty, something rarely seen in the tough car market and usually associated with products like the iPhone. A couple of Honda customers have spoken up about the car's appeal. Melissa Jones, a software engineer from Utah, mentioned that while she isn't especially concerned about air quality or climate change, she's a fan of Honda vehicles. She shared, "I'm not really into EVs, I just wanted to try the new Honda," adding that it's now the family favorite. Similarly, financial manager Abreu from Queens, New York, bought the Prologue in September and said the value was simply unbeatable. So, why is Honda's Prologue selling so well in the US? The Wall Street Journal explains that part of its appeal lies in its simplicity. It's not flashy. With a base model price of $47,400, it's $400 below the average US car sale price in September. The fact that it's priced on par with its gasoline equivalent seems to be a winning factor. Bloomberg reports that despite talk of slowing EV growth in the US, third-quarter sales show strong demand. This suggests that many drivers may have simply been holding out for a more affordable option or a new model from a brand they trust. The data reflects a shift, as US EV and electric truck purchases hit 346,000 in Q3, up 5% from Q2 and 11% year-over-year, marking the highest recorded growth. This report shines a light on a potential resurgence in the US EV market, with Honda's Prologue standing out as a key player. This story brings fresh insights into market trends and shows renewed interest in electric vehicles. Here's the fifth major news update worth sharing, based on a report from Business Insider. The headline reads, Elon Musk's wealth soars past $300 billion as Tesla shares climb on the back of Trump's election win. So far, it appears that the biggest winner of Trump's election is Elon Musk. Business Insider reports that Musk's net worth has surpassed $300 billion for the first time in nearly 3 years, thanks to Tesla's stock surge. This spike is largely due to investors betting that Musk's close ties with President-elect Trump will benefit Tesla. Some readers have been asking why Tesla's stock soared after the election, and, according to this report, it's because of Musk's alignment with Trump, which markets believe will be advantageous for Tesla's growth. The article continues by noting that since Trump's win, Musk's wealth has increased more than any other billionaire tracked by the Bloomberg Billionaires Index. Since Tuesday's close, Tesla's stock has risen by 28%, adding $50 billion to Musk's fortune. To put it in perspective, Musk invested $1.3 billion in Trump's campaign, and with Trump's victory, his wealth has increased by $50 billion, an incredible return on investment. Musk's total net worth now stands at $313.7 billion. Trump has also publicly stated his intention to support Musk's SpaceX, the satellite launch company. Wedbush Securities analyst Dan Ives told Bloomberg TV that Musk's best strategic bet was on Trump, making him the biggest winner of this election. Back in July, Trump had stated at the Republican convention that he would end electric vehicle (EV) subsidies. While this initially caused concern about Tesla's future, Musk later shed light on two significant details that have calmed investor worries. First, the EV subsidy. Musk has recently shared in various interviews that, despite Trump's statements, it's actually impossible for him to remove EV subsidies because they are part of the Inflation Reduction Act. This act, which was passed by both the Senate and House and signed into law, mandates these subsidies. Removing them would require a new round of legislative votes, which Musk believes is highly unlikely. Musk chose to reveal this after the election, hinting that he and Trump were aware of this all along. Second, China tariffs. Musk has also addressed Trump's plan to impose a 60% tariff on Chinese imports, saying it would be gradual rather than immediate. Implementing such a high tariff all at once could disrupt the entire supply chain, so Musk predicts that any increase would be limited to 10 to 20%, rather than the extreme 60% figure. This disclosure serves as a reassuring message to Tesla's Chinese market and indicates that Musk is relaying important internal insights to China, establishing goodwill and likely securing valuable support from the Chinese government. So, with Tesla's stock soaring by 28%, next week may see further gains. The stock market believes that with Trump's win, Tesla will see significant improvements in both the US and Chinese business environments. Additionally, Musk's gains aren't limited to Tesla. His SpaceX company, focused primarily on government contracts, is expected to see a surge in value due to its importance to US national interests, including the Starlink project. Through Musk's insights, we gain a clearer understanding of Tesla's recent stock rally and the strategic factors at play. Here's the sixth major news update based on an important report from the Wall Street Journal. It's rare to see significant news on a Sunday, but the Wall Street Journal offered valuable insight today by analyzing a key question: what exactly does Trump want to accomplish? The report suggests that Trump's second-term intentions have remained consistent with his earlier statements. What's interesting is that his approach seems to make allies more anxious than adversaries. For instance, Russia appears more relaxed and even cautiously optimistic, while European countries, especially in the EU, seem tense. The title of this analysis is Deals and Deterrence: Trump's Foreign Policy in a Dangerous World. According to the report, President-elect Trump is expected to showcase America's economic and military power to instill fear in adversaries and push allies to make greater concessions. This statement offers a clear picture of Trump's worldview, or international outlook. He has two main goals. Intimidating adversaries, Trump plans to apply maximum pressure on America's opponents to coerce them into submission. Pressuring allies, Trump intends to push allies toward greater compromise. While he may threaten and intimidate them, his goal is ultimately to secure concessions, not to sever ties. The article further explains that the world has grown more dangerous since Trump's last term, and both his current and former advisors expect him to deter foreign rivals while employing a deal-making approach with US allies. For example, the incoming German Chancellor, Merz, has expressed willingness to negotiate with Trump, understanding that enduring Trump's pressure would be difficult. This shows how Trump's strategy of intense pressure on adversaries is having the desired effect, though its ultimate success remains to be seen. Trump's advisors argue that under Biden, adversaries did not fear the US enough. They believe that by showcasing America's economic and military power, Trump's second term could bring about peace, or at least prevent escalation in regions like Ukraine and the Middle East. Former National Security Advisor Robert O'Brien, who may serve in a senior role in the new administration, said that Trump's approach could restore peace through strength, ensuring that America's rivals understand their previous actions won't be tolerated. For example, Trump's attempt to negotiate with North Korean leader Kim Jong-un in 2019 ultimately failed, highlighting the difficulties in achieving stability in certain regions. Since then, global hotspots have only grown more complex, with overlapping issues that can no longer be addressed in isolation. For instance, former Trump officials noted the connections between North Korean soldiers working with Russians and Iranian missiles being used against Ukrainians. This interdependence of policy areas means that a more comprehensive strategy is now needed. Since February 2022, Biden has not communicated with Russia's President Putin, while Trump has indicated that he would seek a diplomatic solution to the Ukraine conflict. Retired Lieutenant General Keith Kellogg, a senior national security advisor under Trump, suggests that Trump's personal diplomacies could help dismantle anti-US alliances, emphasizing the importance of direct relationships in foreign policy. Trump's approach also includes potentially increasing trade tariffs on European and Asian allies, which could place new strains on US alliances. Trump has often complained that countries like Germany enjoy a significant trade surplus with the US while benefiting from American military protection. Jeremy Shapiro, director of the European Council on Foreign Relations US project, stated that while he doesn't believe Trump wants to destroy alliances, Trump views them as overly exploitative of American generosity. Trump's frustration with Europe stems from viewing allies as ungrateful, poor relatives who overstay their welcome. French President Emmanuel Macron recently addressed European leaders, warning them to prepare for a new era in US relations, one focused more on American interests. Macron acknowledged Trump's legitimacy as an American representative, cautioning European countries to be ready to defend their own interests. During Trump's first term, his team struggled to convince Europeans to replace Huawei and other Chinese telecom equipment, fearing espionage risks. Trump's trade war with Europe made some leaders hesitant to cooperate with Washington. If European countries feel that Trump's new administration prioritizes Russia over Ukraine, they may strengthen ties with other global powers, including China, even at the risk of straining US alliances. The article makes it clear, Trump's foreign policy strategy involves pressuring and weakening America's adversaries while pushing allies to shoulder more responsibility. The Wall Street Journal mentions that while Macron leans toward opposition, Germany is more open to cooperation. Trump's deterrence approach includes a strategy to weaken certain adversaries while attempting to divide the anti-US alliance. For instance, Trump hopes to drive a wedge between Russia and China, though he is wary of China and holds no illusions about its intentions. If he successfully disrupts the Russia-China alliance, it would benefit American and broader Western interests. The Wall Street Journal has outlined Trump's intentions and expectations for his allies and adversaries. Tomorrow, I'll share more about Trump's plans, including the 9 specific policy goals he has in mind for both domestic and foreign policy. Understanding these could provide deeper insight into the potential direction of US policy shifts under his leadership. Finally, let's discuss a topic: how China might respond to Trump. The international community, especially in the West, has been actively analyzing what a Trump victory might mean for US-China relations. While Trump has a set strategy toward China, many are wondering how China will respond. Reuters' take on this topic doesn't predict any dramatic moves, nor does it claim that China's leadership under Xi Jinping is without options or simply resigned to take whatever comes. Instead, their approach is a balanced assessment. As the world's second-largest economy, China has weathered major challenges before, like the turbulent Cultural Revolution, even with a much weaker economy. It's unrealistic to assume China would falter just because of a change in US leadership. Instead, Reuters highlights 2 main areas in which China could prepare to counter Trump's potential policies. Managing a new round of trade wars, this includes exploring strategies to handle Trump's renewed push for tariffs. Considering retaliation options, while some tools may be limited, China could have measures to counter Trump's policies. Through this lens, Reuters examines potential Chinese strategies with a rational, market-driven approach, similar to how one might analyze the Federal Reserve's actions. Ultimately, China's responses will likely be pragmatic and focused on available options. Part 1: China's response to Trump's trade war. Reuters' headline on this issue reads, "Ready or Not? How China Scrambled to Counter the Second Trump Shock," indicating that the tactics China previously used might be less effective this time. While it's still unclear how many of Trump's campaign statements will turn into policies, China's options appear constrained, especially due to the risk of a steep yuan devaluation. For Trump, tariffs seem to be his go-to move, and if he were to impose a 60% tariff on all Chinese goods, it would be a significant challenge for China, which is already dealing with a struggling real estate market and weak consumer confidence. Trump's potential move to impose 60% tariffs on Chinese goods, along with a 10% tariff on other countries, would echo his approach in his first term, where he pressured China to agree to major trade deals, such as purchasing $200 billion in American products by the end of 2021, a goal China ultimately fell short of. To understand the context, during the 2018 trade war, Trump's tariffs reduced the direct share of Chinese exports to the U.S. from 19% to under 15%. Some of this loss was offset as Chinese exports were redirected to Southeast Asia and Mexico, although the effectiveness of this strategy is limited if U.S. authorities closely monitor such rerouting. Goldman Sachs estimates that the 2018 trade war caused China's GDP to drop by 0.65%. Should Trump implement a 60% tariff, it could impact China's GDP by as much as 2 percentage points, excluding any losses from rerouted trade. A severe devaluation of the yuan might offset some of these effects, but with China's economy now weaker and facing its own internal challenges, such as the property crisis and financial strain, the strategy of currency devaluation may no longer be viable. In 2018, a 10% yuan devaluation helped absorb 2/3 of Trump's tariffs, but a larger devaluation would risk triggering capital outflows and financial instability in China's economy. Given these risks, it's becoming clearer that previous tools like devaluation may be unsustainable. Wall Street analysts believe that China's options for countering Trump's trade moves are now very limited. Part 2. Strengthening relations with U.S. allies. While tariffs and trade tensions remain, China is also working on an alternative strategy. A Wall Street Journal analysis suggests that China has potential cards to play in this situation, although this aspect is rarely covered by Western media. Beijing is likely to pursue closer ties with the U.S. as allies, a strategy that might already be underway. China has reportedly been engaging in diplomatic and economic outreach to American allies, offering tariff cuts, visa waivers, and investment incentives to attract countries in Europe and Asia. This unilateral opening, as Chinese policy circles call it, reflects Beijing's awareness of the need to counterbalance Trump's trade policies. Chinese leadership is considering tariff reductions in certain sectors like telecom equipment and agriculture for European and Asian partners. By pursuing such strategies, China hopes to gain leverage and time, knowing that the US's more confrontational stance could strain its own alliances. That said, the obstacles to this approach are significant. Relations between China and Europe have soured due to issues like China's stance on the Ukraine conflict, and many of America's Asian allies remain wary of China's growing influence. Nonetheless, China has waived tourist visas for over 20 countries, including Australia, New Zealand, Denmark, and Korea, in recent months. This strategy of courting U.S. allies could serve dual purposes. It might help mitigate trade losses and also create political distance between the U.S. and its allies. While Trump's proposed 10% tariffs on other countries would likely increase their frustration with U.S. policies, China's outreach could potentially drive a wedge in these relationships, benefiting Beijing's position. Conclusion. In summary, China appears to be navigating Trump's second term with a blend of acceptance and adaptation. On the one hand, it may have little choice but to tolerate tariffs, given that it cannot directly control U.S. policy. However, it is also pursuing diplomatic outreach to diversify its trade partnerships and seek alliances outside the U.S. This strategy reflects a calculated approach, emphasizing China's pragmatism in a challenging environment. The ultimate question now is whether Trump will indeed implement his campaign promise of a 60% tariff on Chinese imports. Should he settle on a lower rate, it might reduce the overall impact on China's economy. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.